Today is going to be a practical webinar, just looking at looking at support and resistance levels. Mostly like to see them in a higher time frame and how to maybe combine and look for lower time frame opportunities around those levels. That was one of the recommendations made by Seb. So let's see. And I've been also mentioning the importance of looking at those support and resistance, maybe even in trend line zones as well in the higher time frame, at least to have a baseline for your strategy, and then you can go to the lower time frame or even combine with other things on the higher time frame for your execution. So yeah, let me just share my screen. So support and resistance, right? Topic that has been mentioned quite a few times. You also learned about it during the course. Where to see them, how to identify them, which ones are more important or not. So basically, I'm going to just go from an empty chart and try to start drawing what I can see as maybe good levels of support resistance, and maybe how to then fine tune them as I go a little bit more in detail into the zone to see if there's a possibility of maybe adjusting the lines a little bit above or below. Maybe also use those trend lines that they can also combine quite nicely with levels of support resistance on my platform. And then maybe go into the lower time frame when price is approaching those levels, or to find good opportunities. And I'll just 1 second, my platform freezing here. What's going on? Okay, so this is the daily time frame. This is euro dollar. So yeah, so if I start like from the higher time frame, I may start either from top to down or from the bottom to the top. For example, I can see that price is reacting from this low in here. This is an important level. Aside from that, we have this one in between, which was an important zone as well. That it's a lower low that was created and it hold price for quite a few years, couple of years. Aside from here, we also have this important zone that was created during COVID. Maybe these lows as well. They may be this low from here. It's maybe important as well. We maybe had also all these lows in here from the left side that you can see it has been touched quite a few times as a support. It was broken, then it worked again as a support level. So another zone that I can see in here. And then sometimes what you start having is lines that are close to each other, right? For example, from this low, we also have all these lows in here. Basically have two lines, one close to the other, and maybe even this low in here can be important as well. So don't forget that this is a daily time frame chart. So actually, if you go down and if you like to trade, or if you look for trades in the lower time frame, then maybe on the 15 minutes or even 5 minutes, Seb was trading on 5 minutes, you're going to have some space in between these levels. So even between from here is 20 pips, and from the other one to the other one is around 20-30 pips as well. So there's maybe still some space in between those these levels of support resistance. If you check closer, we had maybe this high in here that was maybe a previous level of support. Now it may work now as a good level it was a good level of resistance, and now may work nicely as a good level of support. If I'm not mistaken, it's actually where this low now today on euro dollar is reacting from. Price, I think it has already done this. It hasn't gone up, but it already reacted from this low today. I think that's where it reacted from. But just underneath, we also have these levels in here, right? You can see that we had this one, and this one. So there are a few zones that price usually can react from, which can be from the higher high that you can see, which is this one, or price can actually then react from the other zone that usually you see price reacting quite a few times, which is this one in here. And price can actually react from both of them. Price can react initially maybe from this zone in here and carry on to the upside, and then in the future, maybe price is going to come when price is coming down in the future, and then price is going to respect this level in here. So price may do this in future. First from here, and then in the future it may come to this level in here. Basically, with this being said, is price can bounce from each one of these important zones on the higher time frame. These important previous support resistance zones on the higher time frame. One thing that is important to see is when these zones are being created. For example, now that we just broke this high in here, and if you go actually to 1 hour time frame, you can see that this is exactly where this had reacted from now, from this previous level of resistance, is to see now that when price now is, let's pretend that price is going to carry on to the upside from here. Let's pretend that price is going to carry on like this. And basically, if we had the idea of trading this level of previous resistance and now support level, that trade should have been taken in here. So when price is coming back again, be aware that this one has already been picked up. So maybe it may not be as strong as it is when it's still fresh. And maybe price now in the future, where it's going to go is actually to this now zone below of previous support resistance zone inside here. And we have also this demand level that it was kind of the decision to break all these highs in here, even these ones as well. So this is kind of a good level that price can go all the way down and react to. However, if you trade in the lower time frame, maybe you already had a good zone to a good opportunity to go long in here. With this being said, is that you can have good setups either in here or in this one. For example, in this, if you take a look at this time frame in here, in terms of zones of support resistance, I would say we have all these lows in here. Maybe adjust a little bit to see where actually price reacted more times. Good level in there. Maybe even this one in here. So when you have so many lows or like together, it can be tricky if you just want to actually define a specific zone. It may be better actually to define kind of a range that price has been reacting from. So for example, in here, it could be hard to define just one specific horizontal line that's going to tell you, that's going to be like the kind of exact point and the expect price may to react from there. It's better maybe to just draw actually a zone and define this range in here. You can do it with a rectangle, and maybe that's going to be your zone for the future, to be aware if price actually bounces then in the future from within this rectangle. So sometimes you have just a simple horizontal line and it's quite easy to identify. Some other times you have this full range, this zone in here that you need kind of a rectangle to define exactly the zone. So yeah, so I would draw kind of this rectangle in here. Aside from that, I'll see these highs. This one was kind of important for me. It held price in here, so these two lows were important. It was a supply zone as well, and eventually we broke them, and this level as well is important. These two lows in here, it can be a good zone for the future. Basically, price broke this level, reacted from in here, and now carry on to the upside. So after the break of these highs and these ones, price kind of, we have a higher high, a new high being broken, kind of a confirmation for price then to carry on to the upside. So something that sometimes I mention, that when I want to see a reversal, instead of just being bullish straight away as soon as we see a new higher high being created, actually maybe wait for a second higher high as an extra confirmation that maybe in this moment we are ready to go to the upside and carry on to the upside, instead of maybe having just a false breakout and maybe price on the first high is after creating the first high, maybe price is going to carry on to the downside. So a second break of a high is a good confirmation as well that validates the reversal of a trend. And then these previous highs that were just broken, they are nice as well to mark them for the future. So keep an eye on as well in there to look for a possible reaction from price in the future around that zone. So that could be another zone to look for a support or resistance level. In here, this one is important as well. This, I would draw it like that as well. You can see that price breaks it, it respects it quite a few times, previous as resistance, now support. Price goes up, price goes down, price respects it as well. So another thing is price, sometimes it's going to react quite a few times, like just pretend that we have a line in here. Price is going to, 1 second, price is going to react from here, kind of create as a resistance. Price may break it. Now it's going to work as support. Price may break it again. Now it may work again as a resistance again. And just around this, if you kind of play around just this white line, you're going to have maybe quite a few opportunities to either go short when it's working this, when you see price holding to the downside. When it's broken, you may see it kind of as a breakout strategy. It can even be immediately or when price comes back in here. And when it's broken again, usually you can still see a good, maybe a good opportunity to look for shorts in here. So if you are just looking even to try to just break out support resistance levels, pay attention to that line and see how price actually bounces from there. And see if these zones are still fresh when they are broken. And another good confirmation or confluence that you can use, not even considering any other indicators that you may include in your own strategy, is if you have, when you break this level, this size, if you have kind of a demand zone created around here that may push price up, and or for example, if you have a supply zone created in here when you have this move down. So a combination, as I mentioned in my first webinar, I believe, a combination of a demand zone after the break of a resistance level, that could be a good zone to look for longs, or a supply zone, a supply created after the break of a previous support zone, that can be work quite nicely maybe to look for shorts. Similar to this one, this is a demand zone. This was kind of the previous line that I drew it, and eventually when price gets here, price reacted from the demand zone, and now it carried on to the upside. There is quite a good examples as well, just on the last week on pound dollar, that I will just show maybe in a little bit. So yeah, if I drew it, like for example, now from here we have this size being created in here, and we have this low that is important as well. So we have this level, we have price being touched in here a few times, and in this case, price already broke it. And basically it went there straight away. It retested already this line 1, 2, 3, 4 times. So it worked quite nicely, kind of the strategy that I mentioned in here. This is a good example of actually I just showed. Basically price respected a few times, it broke it, and it bounced from this demand zone. It's kind of aligned with this zone. Price goes up, goes up, goes up, goes up, breaks it, and then it still works this exactly same line. It still works as a sell opportunity to go down. In the future, we'll see how price reacts from there. It has already been respected so many times, and that let's see if eventually when price gets there, if this level of resistance still holds, or if we're going to have either a false breakout, or even on maybe the break of it, and maybe a continuation to the upside. And it basically it's going to still be aligned this previous level of support, the resistance that I drew initially. And you'll see that price is making just decisions around this level, and I'm expecting actually something similar to happen around in here in the future. After the break of this size, we're going to either see maybe a breakout, retest, go down, or a break, retest, and carry on to the upside. That could be actually a good strategy, a good trading setup in there. Another zone, we have this low in here. There you go, similar scenario. So it's just as a starter, just always start from the most obvious lows that you can see. You can draw it as well from this one, that it was respected in here, or this one, which is eventually, as you can see, it was respected in there. This is exactly actually the scenario, a similar scenario that I I mentioned just a little bit before, which is which is when we have that line that I just mentioned before. I'm actually going to zoom out and go to the daily time frame. This is a good example of what I mentioned before, which is what I was saying before. In here, when you have price respecting maybe from this level, and then maybe in the future it's going to respect from this one, and in here, which is kind of where the demand on 4-hour time frame is, it's almost similar to what happened in here. So we had this zone in here, this important low, and then around here there is a few touches as well, and we have first price respecting this lower low in here, and then respecting the next one that was in here, and this is actually kind of the supply zone that was created to break all these lows in here. So this is the supply that breaks these lows, and this one, actually this lows, a second confirmation, price first retest from this one, and then in the future it goes all the way back and respects from the previous one. So another advice that I would give is keep your support resistance lines in there, especially if they are in the higher time frame. Don't delete them immediately. Just keep them on your chart, because you may see that price is going to react from there in the future. If you are just drawing a lower time frame supply and support and resistance zone, in that case you could be deleting them more regularly just to clean up a little bit your chart. But if they are higher time frame zones and clear lows, like for example this is a clear low, this is a clear low, it basically took quite a few months until price eventually broke this level. The same with this one, this high is quite important. Just keep it there still, because price may react from there as well in the future. This double low as well, this low in here as well, this one may react as well. And can you see how price react from there a few times? Can you see how price reacted from here a few times, right? And here. And so yeah, so keep those lines, keep those support and resistance levels drawn on your chart. My recommendation it will be to actually go back to the left side and start drawing them and see how price actually reacts and keeps reacting from these levels. Can you see how from this one now it reacts from here? You need quite a little bit of practice to get used to see price behaving or moving from in between this this support and resistance zones. If you combine this higher time frame support resistance zones, if you take a look at this one, and then if you try to see maybe an opportunity inside here, so this is a higher time frame, either 4-hour daily time frame, previous support that may work as a resistance in the future. If you now take a look at the lower time frame in there, just collect this one in here, or even this one, but let's start from this one in a second. Just insert this indicator, because I know some of you like to use this. The 15 minutes. All right, so this is the 15-minute time frame. This is a time frame that most of you also like to use, from what I've seen, as in terms to for the execution. So you start from the daily 4-hour time frame, and then you go to the 15 minutes. That's a pattern that I've seen from some of you in your own strategy. So on the higher time frame, daily 4-hour time frame, you saw that you identify that support zone that may work as resistance. And I don't know if any of you like to look at supply or demand, but this is a supply zone in there. But now let's just look at price approaching this zone. So in terms of the approach, something that if you like to trade as well, reversal setups. So this could be a great example of how you could have benefit from it on the lower time frame. So basically, we have price showing some weakness as price is moving towards the zone. So basically, price is creating this high, And as it gets close to the zone, is creating, there are new lows being created. So price is not just shooting straight there. And if price is just doing this, maybe it's not a good moment to look for the selling there, because price is not showing any weakness at all. No sellers getting into the market. As price is going like this, you can see the amount of wicks, the amount of indecision that is being created in there. You see that price is going down, even managed to break a few lows. Same pattern in here, and then eventually price goes there. Now, if any of you even likes to trade with the RSI, and that's why I actually put the RSI in here, you can see, as I mentioned a few times, a pattern that you will see happening close to the reversal is these hidden divergence between RSI and the price, right? So price is creating higher highs, and you can see on the RSI that price is actually creating lower lows instead, lower highs instead, and maybe even lower, maybe even creating lower lows in here, right? You can see that price is basically doing something like this, which is the complete opposite that you can see on price. And usually you can see that behavior happening in three moves. I can see 1, 2, 3, which is exactly what you can see here: one high, second high, and then the third high. So this could be a way for you to, if you like to trade reversal setups, this could be a way for you to combine a higher time frame level of support resistance with a 15 minutes time frame zone to look for the entry. If you then even look for maybe another confirmation, you can even wait for the break of this low, or if you actually trend with use trend lines, maybe you could have used or waited for the break of this trend line. I don't know if this could be the best way to draw it, or maybe like this. And then as soon as we have the break of the trend line, maybe that could be the trigger to look for the sell. And then it will depend on your own strategy, on how you look to execute the trade. But this could be a great example how to apply that higher time frame support resistance zone with a lower time frame. Not even considering the liquidity part that I usually like to mention. We already had quite a few highs in here, so it was actually a good zone. And if you even draw that previous line, that it was with a low in here, it's respected initially. We have kind of the fake breakout, and then around this level you could have looked for the extra sell as well. If you missed the sell in here, this could have been the second attempt to look for the sell, especially after the break again of this low, and kind of we have space to go to the downside. And this could have been a second entry aligned with this previous level as well of initially to support, then resistance, and then it works again as a resistance. Yes, as a resistance to look for the sell. So yeah, this was a complete combination of two levels of support and resistance zone, and how it usually you see working. Initially it's respected. Someone is talking.
Quick question. Could you quickly just go over how to draw trend lines? Because I was having some issue last week with my trend line. So how do you not, I guess, how do you know which lows to include in the trend line without having to move that trend line? Because I don't know if you remember last week, I think I drew my trend line a little too
white, I remember.
Supposed to be a little more kind of inclined. So just quickly go over
That's a good question. To be honest with you, I'm not. I don't review trend lines that much. I've been starting drawing them more as I actually joined since I joined Alphachain. I don't know if the rule is even, sometimes some people don't even want to consider the wick of the candle, maybe just from the body. Some other people draw it straight away from the wick. So maybe if you start from here, me personally, I would try to catch this high in there, and I would just draw it, carry on drawing like this. So the high that I want to catch is this one, which hasn't succeeded yet. This is magnetic. My price is magnetic. So I'll try to catch it like this.
So the reason why you, if you kind of move further down to the right of the trend line, right there at that point where on the trend line it crossed, but it came back in. Yeah, right there, right? So why did you not put the trend line on at that high instead of, yeah, why didn't you do that?
Yeah, maybe after I see that this level, maybe actually it was just a small rejection in here. Maybe I would adjust from this size. Maybe that could be an option. And the only reason that I'll do that, it will be because it's so close to here that I would maybe consider if actually the move at then this, I wouldn't do it straight away. I would actually look at this, and maybe I could see as a break of the trend line. Now that price had moved so much to the downside, now I wouldn't even pick up this high. I would actually maybe pick up this one instead. Just from what I see right now, right at the moment. So at this point, if I want to consider from this high, I would actually draw from here, and then let's see if price reacts from there or not. Or maybe a more recent one, it will be maybe just from here to catch that one, and something like it's magnetic prices.
Okay, cool. Thank you.
Yeah, something like this, and you can see that price respected, and eventually now it was broken to the upside. Maybe there was already something like this to be drawn as well. Maybe from this high, from here to here. Again, it was respected still a few times even after the break, and then yes. I think I've mentioned a few times that actually the way I used to use trend lines more, it was actually kind of as a confirmation for the execution. It will be kind of in this scenario. It was more of a wrong button. It was more of a 1 second. I would like to see price having a deeper, how do you say it, a deeper angle in on the way up. Then actually, especially when price was approaching a zone that I would be interested to look for a trade. If I could see something like this, yes, maybe the break of this would give me the signal to look for the short. This is usually how I used to use trend lines more recently, because some of you use them. So I actually start adding trend lines on my own drawings, more as like this, in order to see prices trending, or when actually maybe if this level is going to work as well as a possible resistance level, and maybe something like this. This happens as well, like the same way that the price likes to bounce from between horizontal lines. Apparently, price also likes to bounce between these diagonal lines. Just go through the charts, and if you don't believe it, just look at the charts, and you'll see how price behaves and jumps in between those levels. The reason exactly for that, maybe I don't know the reason, but after seeing so many times doing it, I just believe it. But yeah, I don't know if anyone else has a specific way to draw trend lines, if there is a specific rule or not. I believe then eventually it's going to be a little bit personal as well, the same way that you drew support resistance levels. The way that you identify, for example, I may consider this low as super important, or I may consider this one as the important one, or maybe both. For example, for me, I considered that this one, basically the last low that creates the last higher high, these levels usually for me are quite important. So I would consider for sure this one to see how price behaves around here in the future, especially if this move broke highs on the left side. Usually this level in here is quite important for me. So that will be one zone that I would be drawing support resistance. For example, this level as well, important, and is broken, and eventually in here, maybe you'll see price reacting from there in the future. This one, which is basically, or this one as well. Then it depends on the scale, but yeah. So basically this high is the last high before the last move to downside. And you can see how many times price already bounced from there. and you'll see in the future. This is going to be a little bit of practice and repetition for yourself to see exactly what suits you best in terms of what you see, and you see how price behaves on a regular basis from that level. So for example, if I was doing now from between this low, between the other one that I mentioned in here, something like this, but then I look at this and I can see that if I zoom in, actually, I see that the supply zone is actually from this level. Kind of, you have this supply zone in there. That is still fresh, price don't never touch it. So maybe then I'll combine these two and I'll use maybe now this low instead, that it's a little bit more recent from what happened in here. We have all these lows as well. And maybe I'll look for the possible reaction within this zone. So you have your first zone when you're doing those 4-hour daily time frame zones or highs, lows, at support resistance level. But then if you want to go into detail, you can zoom in a little bit more. You see when the zone was broken or respected. In this case, it was broken, and then you can go there and you can try to see what do you like in here. So maybe you can start doing exactly the same exercise, which is okay within this zone. Maybe you can go then to the 15-minute time frame within this zone, which also I like maybe this one that was reacted in here. We have respected in here. But of course, let's consider this one as well. This one in here. And then you see where it combines more or less with the previous one. Maybe this one as well. This one maybe is been touched to here. And then all of a sudden, if you see that price actually connects with both of them, maybe that will be exactly the zone. However, when we are drawing these levels, we're not expecting the reaction exactly to the pip, right? We're expecting to see as a zone, to see if price actually reacts from there or not, and not exactly expecting price to react from 109.796. That's not the approach to when you are trying to identify support and resistance zones.
Another quick question. You're now on the 30-minute time frame. If you look at the trend line you drew, the small trend line you drew that it broke, just literally right under where your mouse was. Yeah, right there, right? So if you go down to the 15 or even 5-minute, right, where price broke that small trend line, what candle are you looking for to get in? Like what candle pattern or kind of confirmation candle are you looking to get in on the smaller time frame right there? So I guess, yeah, so price did not come back up and retest. Is that correct? So it broke and it looks like it didn't come back up and retest before it continued downwards.
You mean here?
Yeah.
Yeah.
It looks like it just broke and kept going. So how would you have gotten in, or would you have gotten in?
Me personally, I'll be looking for two zones to enter. First of all, it will be here. So after, this is kind of where the decision kind of to stop going up and to go down is made somewhere inside here, and you have the break of this. You have the break of this initial, right? The break of this kind of previous support zone. It actually respected from the trend line, so it was actually. And sometimes you see this happening, right? If for price to break a zone, it needs to react from something else. In this case, it reacted from the trend line quite nicely. Actually, if it just even this a little bit to touch this one, you see it was there. Because I would personally, I prefer to see the market horizontally. So this for me to be already a breakdown. So this could be the first trigger, and I'll try to go long somewhere in here on the retest in here. Secondly, two ways to do it actually, which it will be. You can either place a sell limit order straight away in this somewhere in this rectangle, not in here, but in here. Because in here there's no break yet, the break is in here. So press a sell limit order, stop loss would be maybe above this high, and that's it, you have your trades. Second way, if you want another confirmation, you let price go up and you start following the previous low. So you had this low and then you start having this one. And if you want, you can start setting a sell limit, a sell stop order, which is basically as soon as this is broken, you are short. So you have market order at exactly at the price at the moment. You have limit order. In this case, a sell limit order, it's a limit order above price, or you can have a sell stop, which is actually a sell order below where price is. And as soon as that zone is broken, you are short. This could be one of the scenarios. So one here, another one in here. That's what I'll be looking for. If you are still waiting for the break of this trend line, because you can see if the trend line already being broken so many times, being respected so many times, you have another option, which is actually, the way I would see this is price reacted from here. If let's pretend that I'm not short in here, so I'm still not short. I have this zone now drawn, and I could see that price respected it. So as soon as I see price respecting this level, I'm either expecting price to carry on to downside, or if price breaks this low, I'm expecting price to then just to carry on to downside. So you could do exactly the same. You could set up a sell stop order in here, like below this low or even this one. And that's it. As soon as price is broken, as soon as price is breaks this level, you are short. Another option, if you still don't want to do this, is actually to wait then for the retest of this trend line, and you are short. In this case, price never did this, so you'll be missing missed the trade. That can happen as well. It's okay. But yeah, you have basically kind of, that is the way I look for it, is exactly these two kind of entries. Some of you, I know that you may wait for a double close of a candle. Maybe that could be one of the scenarios. Maybe, okay, maybe you have this one, maybe you're shorting here, or even straight away shorting here. I'm not really sure what candle we are looking for, but I know some of you like to wait for the second close of the candle as a trigger to go short. That could be an option as well. And then just, of course, pay attention to how wide your stop loss is, and in terms of your possible risk reward of the trade. So this is of course, as you start looking for the sell, far away from the initial reversal, be careful that eventually price can just reverse and maybe stop you out. Then your risk reward is not as good as if you enter a little bit close to the highs. And then you can carry on playing. As soon as we see some lows being broken, maybe you can start looking for the continuation to the downside. If you are expecting, from your own analysis, if you are expecting actually price to retrace and go all the way down. But this would be two ways. Yeah, the two kind of orders that I like to trade.
Okay, that makes sense.
Yeah, it's basically these two, right? You have not market execute, pending order, and pending order. So you have the sell limit or the sell stop. Sell limit is when price is above the zone. So when you want to enter short and price is above it and price is below it, so we're expecting price to go higher, take your short and go down, or you have your sell stop, price is above it, and you want to see as soon as price breaks. For example, that low or that trend line, you are immediately short, and that's it. So you can come here and you can select both of them.
Okay, sweet. Thank you.
Yeah, and then the other entry, as I mentioned, maybe somewhere in here under the test of this previous line in there. Or if some of you, if I draw here a 50 line here on the RSI, maybe some of you like to see this line being broken for the RSI, and maybe you'll have your entry in there, or the MACD as well. I know that some of you like to trade with MACD. This is the 5 minutes, that's why it's so choppy. This is another recommendation. So, for example, I know that Seb likes to trade, go to 1 hour, 5 minutes, 1 hour, 30, 15, and 5 minutes, and even maybe 1 minute. And he's always looking at the indicators. At least that's what he used to do. But you can see how different, like the RSI on the 5 minutes, it's going to be already from the 15 minutes. And if you go to 1 minute, it's even more noisy, right? So you need to also, when you're looking for this kind of executions, to decide which time frames actually do you want to use in order to collect that information from the indicators. Because if you're making decision on the 15.5 1 minute just based on the RSI, you are going to start getting so many different information that you're going to be confused and not even know what to do in terms of the indicators. Just either stick with the 15 or 5 minutes, just choose one and then make your decision in there. If you have a sell if you see a sell opportunity on the 15 and then you still maybe want to go on the 5 minutes to look for the entry, maybe on a crossover of a moving average, something like that, just do it. Just avoid using the RSI on 15 and on the 5 minutes. Just use it on the 4 hour or 1 hour and on the 15. So choose a higher time frame and the lower time frame. Otherwise, it's going to be maybe too much noise as you go down into the lower time frame.
Got it. Thank you.
For example, the price now, for example, today euro, it's reacting from this previous zone, and now let's see where it goes. Next level for me, for example, on euro, it could be maybe the retest of this one in here. That could be maybe the next level of where price worked as a support, and maybe that's going to work as a resistance. We'll see. Of course, when you are drawing as well, when you're drawing your trend lines, maybe because the information that you have, if you are just drawing it like this, like zoomed in like this, maybe this is going to be the only thing that you can see. Maybe this lows, this low, maybe this one's, maybe this one in here. But if you just zoom out a little bit more, the information that you gather now it's way more complete, and this is actually what you should do. So start as well, like start a little bit. You don't need to go to the daily time frame, but at least zoom out as much as possible in order to actually have some more information on the left side, so it can help you to see if you have any important level of support or resistance. For example, let's pretend that now there was an important low created in between here, in between these two zones that I just mentioned. So maybe just by looking at the chart like this, I'll be looking for longs up until price would be here, but in reality, price is already reacting from maybe a weekly previous level of support, and I have no idea because the only thing I can look at is this most recent price action. So be aware as well of on the left side if there is any important level of support or resistance in between two clear zones. That would be another advice for that. Yeah, for example, if you took a look at pound last week, it was quite nicely just in between support and resistance zones, as you can see in here. So basically, if you start from on the pound, okay, this low, start from this low, start from these lows, correct this low. We may have all this level in here. Actually, just before I go here, let me just check on euro, because actually that was actually interesting. Can you see, for example, if I just look in here, wait a second. For example, if I just look like this on euro, like even if you just want to look at support resistance zones, is this a good zone to look for? Just okay. From this line, does this look like a good zone of support resistance for price to react from? In theory?
Yeah.
You said yes?
Yes, there's one touch there, then there's
where, maybe here?
right there. Yeah. Yep. And then one right there as well. And then kind of that area.
Okay. What about if I do this?
Yeah.
Right. This was actually way more important. And if you just look at the weekly, maybe you'll consider maybe from here to here. 1 second. But maybe from this low to this low, and in reality on the weekly you don't even almost see anything in there. But the reality is that on the left side, even more, we actually had a good zone, an important one there, and you can see how nicely price reacted from. And actually price has been bouncing between these two zones in here. So yeah, now, of course, I'm not saying to go check the weekly chart, but just to see an example, like if, for example, kind of honestly, if you check on the daily time frame, there's almost nothing in between this accumulation of lows and this highs. But yeah, but then price actually paused in here, and it has been spending the last 6 years in between this level. But yeah, let's just go to the pound again. Where was in the pound? So yeah, from the pound, we can see, like, I would draw these lows. You can see how nicely they reacted from. I'm actually looking forward for them in the future, eventually when price gets there, because it was kind of an important zone that has been respected quite nicely in the past. So usually it may work in the future, and you can see as well that price worked as well as a resistance in here, and then it may work as well as a support. So that would be it. Now we have these lows. I'll draw this low as well. Basically where price reacted from. We have these lows, of course. This is an important zone. Price has respected in here a few times, and now in here. So maybe price is going to bounce from there in the future. We have these highs, which are important for where price is reacting from now. Just a little bit above, we have this one. So let's see how price behaves in there. We had these touches in here, reacted from here, and maybe it reacted from there as well on the wartime frame. These ones as well. We have now these lows, these highs, sorry. And what else? We have this one in here. We have this one in here. We have this one important in here. That price has respected already. What else we have in here? We have these ones. Price respected, and now bounce from there. So yeah. So just try to see like the most obvious high lows. Of course, this is the daily time frame. If we go now to the 4 hour, now we start talking this way. This may be important. We have all these lows. We have this high in here. Let's actually see the daily, the 1 hour time frame. From there to here, we have these lows as well. So price reacted from there. It bounced this high in here, where price reacted now. So this is a good example as well. Price reacted from there, broke it, and now it reacts. It reacts on the opposite side. And a good way to see it as well is if this low, when you see price creating a new higher high, like it did in here, then when price retraces to this level, it's maybe a good confirmation to look for longs after price breaks this high. If price had respected this, if price hasn't broken this high on the left side, maybe this one wouldn't be a good zone to look for longs. So try to see as well the momentum that price is going. Price is creating a higher high, respecting the low, so there is no lower low in here. So it's a higher low, a new higher high. So basically, price is creating the momentum to go higher. We had already the break of this one, so you can see the momentum on pound in here as a bullish momentum to the upside. So when you see previous level of resistance, that could work quite nicely as a good level for the continuation. And we have these demands again aligned with this level where price reacted from. So
well, let's say you create supply and demand zones or lines based on the weekly time frame. What would cause that zone to no longer be relevant? Let's say you're looking at a weekly and it's a zone that has been touched 5-6 times, right? Is there a reason why suddenly that zone will no longer be relevant? Would that be the case, or is it like?
Let's pretend it's a weekly supply, right? Let's pretend that now So usually good zones where price reacts from on the supplies is usually the edge of it. So it's kind of the base, which can work. This one can work as a previous support resistance zone. So it's kind of in alignment with the concept as well of supply zone. Kind of, let's pretend that the red rectangle is the supply mark. What example can I give in here? Don't even have an example now. But yeah, let's pretend that this is a supply zone. On the weekly time frame as a supply zone, you'll see maybe this one is a really nice previous support zone. So usually you can see price coming out the back and have some reaction from here. Sometimes it's just going to react from there and carry on to the downside, which is okay. Some other times, maybe we then have a better zone in here, right? This may be going to be a daily or 4-hour time frame supply zone. That maybe price is going to bounce again from there. So this is going to create kind of a second bounce from there. Or maybe there's still even something else even above. But what I mean, what you mentioned now for so many touches, I would consider that maybe price goes down, it goes up again, it goes down, it goes up again. And this kind of in a weekly time frame, based on this one, it will be considered already 1, 2, 3 touches. So yeah, for me, it would start getting weaker and weaker. So I could actually expect then price to break it. Another reason maybe for this supply zone to not work, it's actually as also depending on maybe where this low is reacting to on the left side. Let's pretend that this low is reacting actually from since we are talking about weekly, let's pretend that this is actually a monthly demand. And then price goes down, right? Kind of, if you just want to consider like higher time frames, let's pretend that this is a 15-minute supply, but this is a 4-hour demand. Yeah, usually maybe the 4-hour demand is going to be stronger than the 15-minute supply. So if you are looking for the longs, if you're looking for the shorts at this supply zone on the 15 minutes, maybe you can maybe expect some reaction from there, but it's not guaranteed that actually price is going to break these lows. It may have some reaction until then the previous level of support resistance that maybe was broken in between, price reacts from there and carry on and it's just going to carry on to the upside. So this could be one of the reasons. It depends of where this low is reacting from as well on the left side. If it is a higher time frame, more important zone. And another reason could be how many times price starts to touch there. Of course, as more times as it touches, eventually it's going to get broken. So yeah, that could be a good zone. Or another reason is, imagine that we have this weekly supply, but just above it, we actually have another important weekly supply. And let's pretend that actually this weekly supply is actually the one that is aligned with a good, important monthly or weekly support and resistance align, right? So kind of it gives even a little bit more confluence or importance to this supply zone instead of this one. This could be another reason to see maybe this supply being broken, just to react from this one, and then price, it may carry on to the downside. So again, don't just look at where this low is reacting from on the left side, also pay attention to where this high is reacting to on the left side. If there's anything maybe more important to look for just above it or not. So yeah, maybe that would be just a few things to consider when you're looking for those supply demand zones. For example, this one, this looks like a supply zone, right? This one, that it break out these lows, correct? Matthew?
Yes. Yep.
Yeah, it's what we have just above it. Another one, right? So are you expecting for actually for price to just bounce from here, I would actually wait for price to go to the one above it, personally. And then maybe look left and see. There was maybe some reaction still from there. I'm not sure. Maybe the supply was not that one. Maybe you need to consider these walls as well. It depends how we drew the supply zones. I think this actually on the 4 hour, this is actually a good example. So let's just start from this. 1 second.
So yeah,
because on the daily time frame, we're going to see that this is actually a supply zone. Kind of, if you want to consider supply zones, you kind of consider, oh, this is a supply, right? But this is a daily. You can see how price reacted from the base of it, from this low that I mentioned. That price likes to react from the base of it. It reacted, right? You have this move down in here. However, it doesn't guarantee that actually price is just going to go down. Let's see until where it goes. But then on the 4 hour time frame, we may start having a different perspective of what you see. So this is where price reacted from, but it went from there to another demand. So that's it. Price now going up. But this is if you look a little bit of supply demand zones aligned with the support resistance levels, it's actually a good combination of price structure to look for. But yeah, but this one is still this one just above it. So this is not as important. Maybe this one is just seen on the 1 hour, and so on and so forth. You see price still reacted a little bit from there. This one actually then didn't really reacted from there. Now it reacted, demand. Yeah, it's tricky. Now let's see if the supply holds price. For now, it's having some reactions from there. Let's see how it works.
Understood. Thank you.
Now, if you want to combine these previous levels of support resistance, for example, I think we had that set up last week on the lower time frame. Where was it? No, this was a different setup. But hey, if you see like resistance, like you have a high, price still respects it again, price breaks it. It has a completely moved, different move in there. Price is in here again, a little bit of a good approach in here. You can see that price starts losing momentum. Okay, then you have a strong move down, and price still bounces from here. If you want to just look for the longs after this, because we already had the break of this highs here on the left side, maybe you can try to join after the break of this trend line. This could be one option. In this case, price actually then still retraced to this level, but this could be an option to look for the long. Or maybe if I drew again here if I add again here the RSI, maybe going to see some kind of divergence again. But this could be again another way to try to look for an entry aligned with a higher time frame support and resistance zone, and to see how price bounces from it. You can see that this zone is still fresh. Price never came here, so this previous support resistance zone is still fresh, and this could have been another one. Let's see again how price behaves now from here. Similar scenario. We had all this previous level in here. Price touch it in here again. We kind of have now this demand zone. Let's see in the future if price is going to react. Let's see how price reacts from there. And yeah. So and another thing is, usually if price should have done one thing and didn't do it, most likely if price should have respected one zone and it didn't, most likely is going to respect that zone on the way back. For example, if a supply should have respected price on the way down and it didn't, most likely is going now to respect on the way up, kind of as a supply and demand, and then as a support resistance that becomes resistance or support. Like that's where the saying is coming from. So yeah. So that's why it's important. Just why it's important when you are drawing your support and resistance zones to not just start selling anytime price gets at a resistance zone, or to start buying anytime supports get us at a support zone. Find your own lower time frame, can be 15 minutes trigger to give you the signal that you want to see before try to see your confirmation before actually looking for that for that trade, because maybe you never get that confirmation. Price actually is going to break that level, so you just save yourself from a loss. But then when price retraces, maybe that will be the moment to look for the trade. So maybe you're looking for shorts inside here. You never get your trigger to go your signal to go short. Price breaks it, so you manage to stay out of these trades. And then when price retraces, pay attention again to that level and see how price behaves in here. And maybe if you get your trigger, that's it, you are long. And you are still trading in between this level of support resistance. But now we are the opposite. Initially looking for sales and now looking for longs.
Okay. And if you do have two lines fairly close to each other, and let's say two support, two lines that are close to each other, can you draw a box between those two lines? So kind of further down.
Yeah, that's what I mentioned a little bit before on your radar. I don't know if you're here. Like if you have like what is one? Sorry. If you have like you have so many rows in here, right? So many rows in here, and so on and so forth. And you're not really sure which ones to use. Yeah, you can just draw maybe a box to see how price to see how price behaves in between them. That could be an option, just as I mentioned before on the Eurodollar and around all those lows. You are not really here to expect price to react exactly perfectly to that horizontal line and to bounce from there. That could be an option. See how price behaves in between this level. If you want to be more specific in terms of try to find something, maybe you can try to zoom in, go to maybe a lower time frame, and you can try to find those levels. For example, now we can see 1, 2, 3 touches. Maybe this level is going to be important, but then goes. There's nothing much in here. You have this low again. Have this one in here. Creates this move up. This is nothing special, so maybe just this highs in here, or even this low that was created in here, and you start doing just start to see, and then maybe you zoom out and you see, doesn't really make sense, and all these lows like that you are doing in this just a lower time frame, and okay, this doesn't really make any sense. So I can just delete everything that I just did it, and go on. Or if it's not as clear as you want, just don't even. Like I don't mean bother, but don't even pay too much attention to it. Just go try to find some others that are really clear and that are more obvious to you. Like don't try to force, the same way that you mentioned that you like to say, don't try to force trades, the same way that I would say, like, don't try to force things that are not there as clear as they should be, right? So usually actually in trading, it should be kind of obvious when you are looking at a certain thing, and the same applies for support and resistance zones. So kind of like you close your eyes, you open your eyes. After 3 seconds, you could see, this is kind of obvious. Yeah, this is obvious, and so on and so forth. If it's not obvious, just move along to another chart and try to see. Or don't even look for trades in that specific moment. Just wait for price to get closer to a more obvious zone that's maybe clear to you. We don't need to be forcing anything in here. There are enough assets that you can trade from. Enough pairs.
Okay. Yeah. Thank you.
So and then sometimes price is just bouncing between support and resistance, and that becomes a range. And then I'd see, like, for example, maybe price starts behaving like this, and this becomes a little bit more difficult to have a proper idea of what to do. For example, if you take a look at crypto, that's kind of a similar scenario. That's what Seb is trading at the moment, and he asked for it. So basically, at the moment, you are within this range, right? And it gets trickier if you take a look at just 1 hour or 4 hour. Price bounce between this demand, good, high, and now it's in between this range. So what kind of trades can you look in here? It depends. What kind of support and resistance can you draw in here? You can draw your zones from the left side, like in a higher time frame, but then if you're looking inside here, you can see that price reacted from the other one on the left side. Now it's reacting from here, and and there's nothing much that you can have. You just kind of have to wait to see if price breaks to the upside or if breaks to the downside and starts creating, and it moves away from this range zone where it is. Unless you are scalping, looking for scalp trades, and if that's what you do, then you can do exactly the same that you did before, but now in a lower time frame, and you move from there. And you try to do exactly the same. Price eventually moves the same way in the higher time frame, in the lower time frame. Of course, lower time frame is more noisy. It's faster comparing with the higher time frame, but it's still the same in the sense that price respects trend lines, respects horizontal, it respects horizontal lines, and so on and so forth. Yeah, it depends on time frame. So one recommendation when you are inside these levels. Because this has been like this since the 13th of May, so 10 days now, 12 of May. And if this is basically the only pair that you trade, a few things can happen when you're just trading one asset. And if price is in this kind of range, first, you can get confused and you start thinking that you don't have any good trades. And what you usually do when you don't see good trades that actually respect your plan, you start forcing trades, which is the first mistake that you do. Secondly, when you are in a market condition that is not exactly the best suited for your strategy, what you start doing is you start looking for the new shiny thing, which is a new strategy. You start looking for what others are doing, and you start ignoring your own strategy, and you start searching for new things, which can be a good thing, but if to do that, you actually have to decide yourself that you want to start looking for an additional playbook in your own trading plan, and you are not just doing that because you are bored of not having good setups. So don't do that if that's the reason that you are bored or that moment market is not doing it. Second thing is that you either start over trading and you don't even have good setups, or you start losing your or you start being so far away from the market, or not even paying attention to what price is doing, and eventually maybe you are not even aware when price eventually, let's pretend that you are a breakout strategy, when actually price breaks this level and goes up, because you kind of sit down a little bit from the market, you are not even aware when price does this. And this is where you need the discipline of a trader needs to be. This is where it's really important to stay disciplined as a trader. So know exactly what kind of setups you want to see, know super well your strategy in order to avoid forcing trades when market is not in a good condition. Recommendations, maybe do backtesting. If you don't have any trades, it's better to actually spend some time doing backtesting than to test your own strategy, or try to look for another assets to start slowly implementing into your own portfolio.